Hello students and good day to you all. Welcome back to the Financial Academy. This is Chris. And today we're going to go over several markets, highlighting the potential that we can see based on the technical analysis. I'll talk a bit about the fundamental aspect as well, but mainly we're going to focus on the technical aspect. So let's move forward to our chart station. And the first thing that I'd like to cover is the oil on commodities. And I'll zoom out a bit on a daily chart. So what we can see over here is a very nice corrective pattern when it comes down to how much in terms of measurement, how much we're correcting. This is a very good example because we can see a definition of a downtrend, all this structure dropping down, and a corrective pattern corrects its structure. First of all, let's talk about the differences between the two structures. You can see over here that we're talking about a longer period and a shorter amount of movement, while in this downtrend that we can see over here, we've dropped down very quickly in front of this specific structure. So the connection between them again is a connection between impulse movement and a corrective pattern. Impulse usually a stronger, more liquid, quicker movement, and the corrective pattern is slower, or we can just say that it'll take more time for it to cross a specific movement in front of the previous movement that it corrects. So in this case, again, we can mark a 5-wave of a downtrend movement, 1, 2, 3, 4, and 5th dropping down, and from this position climbing up in a corrective pattern. Now, again, the first thing that we can do over here is just to mark this territory, looking at the Fibonacci retracement structure measurements. You can see that we've reached 50%. And I'd like to talk about commodities just a bit. We know that in currencies, the forex market or other markets, we find that other probabilities, other pullbacks or measurements are more logical in the commodities, like the gold, like the silver, like the oil. We know that the probability of closing the position at around the 50% of a pullback, meaning closing the structure of a corrective pattern, is more logical. We find that the 50% pullback has a better probability to complete the corrective pattern structure. Now, that's not the only thing. Obviously, we can measure other structures during this process as well. We can measure the corrective pattern structure, the inner structure of the corrective pattern. You know that the corrective pattern is divided to 3 waves, usually if it's not a complex corrective pattern. So in this case, again, we can see that a structure of an A, let's mark that, A, B, C. You get an A wave, a B wave, and a C wave. So we can say that the ABC structure, again, is climbing up and almost reaching the 100% equivalent to the A wave, the C wave. C wave almost 100% equivalent to the A wave structure in terms of length. So in this case, we've got two measurements that are correlated and showing us that the potential of this structure to complete the uptrend movement has completed its structure, and we can expect to receive some sort of a downtrend. Now, the big question is, what can we expect? And in this case, what I'm going to do, I'm going to mark two territories. The first one is a trend line below this specific structure, and the second one is a trend line on the entire corrective pattern structure. And why am I doing that? Let me explain exactly why. Because we know that one structure has more probability and the other has a lower probability but still has a potential. So in this case, what I'll say is that once we'll cross this trend line below this specific C wave structure, our assessment is to see at least a downtrend movement toward the 52.54 level. Okay, meaning that we're expecting to receive approximately $10 of a downtrend movement, $10 when it comes down to $60 value. We're talking about a bit more than 15-16%. Very nice downtrend movement potential. And again, I'm even not considering the use of leverage. On a larger scale, I do see a potential of dropping even below the lower trend line, meaning a longer downtrend movement. But again, let's make a split between this assessment and that assessment. The quicker assessment is more logical. We have a higher probability for it to fulfill its potential. And the lower line, definitely, we will need to wait and see what will happen once we will cross the upper trend line. And that completes the idea of the crude oil. As I said at the beginning, we will talk about several assets today. We will separate each and every asset to different videos. So right now we dealt with the oil, and we will release other videos regarding the dollar, regarding currencies, regarding stocks later on today. I'd like to wish you all the best video trades. If you need additional assistance, you can always contact our support on our website, that is thefinancial-academy.com. All the best with your trades and have a pleasant day.